Oando's third quarter, 2024. Report revenue goes up, profits go down. This paradoxical situation is what Oando, a major player in the energy sector, is currently facing. Oando, a big energy company, just showed everyone their financial report for the third quarter of 2024. The report reveals some interesting trends that are worth diving into. Their revenue went way up. Specifically, Oando's revenue jumped by a huge 35.76%. This is a significant increase that highlights their strong performance in generating income, but their profits went down. Despite the impressive revenue growth, profits dropped by 30.77%. This decline in profits is a cause for concern and warrants a closer look. Let's look at these numbers. The revenue increase is a positive sign, indicating that Oando is doing well in its core operations. However, the drop in profits suggests that there are underlying issues that need to be addressed. Oando's revenue jumped by a huge 35.76%. This big jump shows they're doing well in their main businesses, such as oil and gas operations. However, the significant drop in profits indicates that there are challenges that need to be addressed. Even though revenue went up, profits dropped by 30.77%. This decline is concerning and suggests that there are factors negatively impacting the company's bottom line. A few things caused this drop. We'll talk about those. The energy market is known for its volatility, and fluctuations in oil prices can have a significant impact on a company's profitability. The energy business can change quickly. Factors such as changes in global oil prices, regulatory challenges, and operational inefficiencies can all contribute to the mixed financial results seen in Oando's report. Oando's mixed results show this. While the revenue growth is a positive indicator, the decline in profits highlights the challenges that the company faces in maintaining profitability in a volatile market. Moving forward, it will be crucial for Oando to address these issues to ensure sustainable growth and profitability. Higher oil prices help Oando's revenue grow. Oando's revenue growth isn't an accident. It's because the price of oil went up all over the world. Higher oil prices mean Oando gets more money for every barrel of oil they produce and sell. This simple idea caused a big part of their revenue growth. But it's not just about prices. Oando also traded more oil. They bought and sold more using good market opportunities. This worked well, making their revenue even higher. Profits down, costs eat up revenue gains. Revenue went up, but Oando's profits went down. Why? A few things squeezed their profits. First, it cost more to run the business. Producing and moving oil got more expensive. This ate into Oando's profits. Second, changes in money values between countries played a role. These changes affected their finances, especially when doing business with other countries. Lastly, Oando had to pay more taxes. This lowered their total profit. Section 4. A mixed bag for Oando's investors. In this section, we will delve into the various financial metrics that paint a complex picture for Oando Plc. Investors have been keeping a close eye on these numbers, trying to make sense of the company's performance and future prospects. Let's look at some important numbers that investors watch. These metrics are crucial for understanding the financial health and potential growth of Oando. They include earnings per share, EPS, price-to-earnings ratio, PE, and earnings yield. Each of these metrics offers a different perspective on the company's performance. Earnings per share, or EPS, shows Oando's profit for each share of stock. This metric is essential because it indicates how much money the company is making relative to the number of shares outstanding. A higher EPS generally means the company is more profitable, which is a positive sign for investors. Lower profits mean lower EPS, and investors don't like that. When profits decline, it can signal underlying issues within the company, such as increased costs or decreased revenue. This can lead to a drop in the stock price as investors lose confidence. The price-to-earnings ratio, or PE, compares Oando's stock price to its EPS. This ratio helps investors determine if a stock is overvalued or undervalued. A high PE ratio might indicate that the stock is overvalued, or it could mean that investors expect high growth in the future. A high PE means investors think the company will grow in the future. They are willing to pay more for the stock now because they believe the company's earnings will increase. However, a high PE can also be risky if the expected growth does not materialize. Earnings yield tells you how much money you'd make if you bought Oando's stock now. It is the inverse of the PE ratio and provides a percentage that represents the return on investment. A higher earnings yield is generally more attractive to investors as it indicates a better return. Compared to other energy companies, Oando looks like a mixed bag. While some metrics show promise, others raise concerns. This mixed performance makes it challenging for investors to make a clear decision. They must weigh the potential risks against the possible rewards. Their PE ratio is kind of low, meaning some investors are worried. A low PE ratio can indicate that the stock is undervalued, but it can also suggest that the market has low expectations for the company's future growth. This uncertainty can make investors hesitant. But their earnings yield is still good. This suggests that despite some concerns, the stock could still provide a decent return on investment. Investors need to consider all these factors to make an informed decision about whether to invest in Oando. Section 5. Oando's big bet on renewable energy. Oando, a company traditionally known for its oil and gas operations, is making a significant shift towards renewable energy. This move is not just a minor adjustment, but a major strategic pivot that could redefine the company's future. Oando isn't just focused on oil. They are diversifying their energy portfolio to include renewable sources like solar and wind. This diversification is crucial as the world moves towards more sustainable energy solutions. They're getting ready for the future of energy. By investing in cutting-edge technologies and innovative energy solutions, Oando aims to be at the forefront of the renewable energy revolution. This preparation involves not just financial investment but also a cultural shift within the company. Renewable energy is a big part of this plan. The company is committed to reducing its carbon footprint and contributing to global efforts to combat climate change. This commitment is reflected in their large-scale projects and partnerships with other leaders in the renewable energy sector. Oando is spending a lot of money on solar and wind power projects. These investments are not just about building infrastructure but also about creating sustainable communities and providing clean energy to underserved regions. This is important for their future. Oando's experience helps them. Their extensive background in the energy sector gives them a unique advantage in navigating the complexities of renewable energy projects. They are leveraging their expertise to ensure the success of these new ventures. They're good at building energy infrastructure and know the African market well. This local knowledge is invaluable as they expand their renewable energy projects across the continent. They understand the unique challenges and opportunities that the African market presents. But there are still challenges. Transitioning to renewable energy is not without its hurdles. The company faces significant obstacles including technological limitations, financial risks, and market volatility. Energy prices change a lot, and government rules can be unpredictable. These factors add layers of complexity to Oando's renewable energy initiatives. Navigating these challenges requires strategic planning and adaptability. Oando needs to deal with these things to be successful with renewable energy. Their ability to adapt to changing market conditions and regulatory environments will be crucial. With a clear vision and a strong commitment to sustainability, Oando is poised to make a significant impact in the renewable energy sector. Section 6. Oando's stock up and down. Oando's stock price has been going up and down a lot lately. The new financial report made things even more up and down. The revenue growth is good, but the lower profits have made some investors nervous. So, the stock price has been changing a lot. Investors are generally neutral to slightly negative right now. They're waiting to see what Oando will do about the profit problems and how their renewable energy investments will do. Section 7. Oando's future. Dealing with changes in the energy market. Oando's third quarter 2024 results show they can make money when oil prices go up, but they're also dealing with higher costs like everyone else in the industry. Investing in renewable energy shows they're thinking about the future and sustainability. But there are still challenges because the energy market changes a lot and is unpredictable. Investors should watch how Oando does with its renewable energy plan and how well they control costs in this volatile market.